In the United States, quarterly taxes refer to estimated tax payments that self-employed individuals, business owners, and others with income not subject to withholding, for example, freelancers, investors, landlords, must pay to the IRS. These payments ensure that taxes on income are paid throughout the year rather than as a lump sum at year-end. Who needs to pay quarterly taxes? You need to make estimated tax payments if you expect to owe at least $1,000 in tax after subtracting withholding and refundable credits. Your withholding and refundable credits are less than 90% of your total tax liability for the year, or 100% of the tax shown on your prior year's return. What income requires quarterly payments? Self-employment income, business income, rental income, dividends and interest, capital gains, other income not subject to withholding. Due dates for quarterly payments. Estimated tax payments are generally due on the following schedule. If the due date falls on a weekend or federal holiday, the payment is due the next business day. How to calculate quarterly taxes. Estimate total taxable income, project your total income for the year. Calculate estimated tax. Use the current year's tax rates to estimate your liability. Subtract any credits or withholding. Divide into quarterly payments. Divide your estimated tax liability into 4 equal installments. Alternatively, use Form 1040-ES to calculate and pay your estimated taxes. How to pay quarterly taxes. Online, at the IRS website, via mail using vouchers from Form 1040-ES, through the IRS To Go app, by direct transfer from your bank account or credit or debit card. Note: fees may apply for card payments. Penalties for missing payments. The IRS may impose penalties for underpayment or late payment of estimated taxes, even if you pay in full when filing your return. To avoid penalties, pay at least 90% of your current year's tax liability or 100% of the previous year's liability.